What's up, everybody? My name is Joe Brown. This is the Heresy Financial Show, and today we are talking about the Fed pivot. Everybody is expecting at some point soon the Federal Reserve will pivot. They'll start up QE again, buying assets. They'll push down interest rates, and I am here to tell you that despite the fact that we are already at the point, actually past the point, that in the past would have caused the Federal Reserve to pivot and start easing again, it does not matter. It is different this time, and I'm going to show you why. Ready? Let's dive in. Real quick, a word from today's sponsor, Swan Bitcoin. I use Swan Bitcoin to buy Bitcoin every single day. I dollar cost average, I stack sats. That means that as the price of Bitcoin is volatile and moving downwards, I'm getting my total overall position at a lower cost. I'm averaging down into it. The reason I use Swan Bitcoin is because we're looking around today, we're watching crypto exchanges lay people off. They're falling over like flies because they've all been not conservative. They've taken out leverage, but not so with Swan Bitcoin. They're extremely conservative, so I know that it's safe to use them. Because they only focus on Bitcoin, they're very efficient, very cheap, and the best part is they're extremely safe because your Bitcoin doesn't stay with them. You auto withdraw to a wallet of your choice whenever you want, and that's why I use Swan Bitcoin. And if you use my link in the description below, you will get $15 worth of Bitcoin just for signing up. All right, first we are going to look at exactly why the Federal Reserve has been here before and what the indicator is that shows that right now they would have already pivoted if the things were the same today as they used to be. Take a look with me at this thread from the Happy Hawaiian, and this is the Fed pivot indicator here. It is an average of the 5-year yield and the federal funds rate multiplied by the national debt. So it has some sort of indication on the burden that the monetary tightening has on the economy and on the government. And so historically here, if we take a look at this, all the way back to 1986 this goes, and you can see here this average line will bounce in between these two blue lines here. And so in March of 89, the hiking cycle ended here. And then in April of 1995 is when it hit up here. In June of 2000, in July of 2006, and then again in January of 2019. Now that January of 2019 there, since this is the most recent one, that corresponds with right after the repo market blew up. So in December of 2018, the Federal Reserve had been tightening. They had been letting assets bleed off their balance sheet. They'd been raising interest rates. The stock market started to fall apart. They were getting a lot of political pressure to say, hey, you need to ease again. And finally, in December of 2018, they folded. And that's when the hiking cycle ended there. And I moved sideways for a little bit in January of 2019 there. And then obviously we have a couple of bottoms here where the hiking really got started. One of these was back here in about 87. One of them was here in about 03. And then one of them was right here in about 2012, 2013. And again, those were some major bottoms in easing, moving forward into tightening here. And then the most recent one in 2021 there. We have this massively quick, look back at history. It has never moved this quickly here, this indicator, where it went from the top down to the bottom. So that's an indication of conditions getting extremely easy very fast. And then again, moving back up to the top, conditions getting extremely tight very fast. And again, this yellow line gives you an impression of how difficult the monetary conditions are on the economy. So right now, historically speaking, when we're looking at this indicator, the interest rates, the hiking, the selling assets off the balance sheet, all of that is already at the point where every time since 1986 that it's gotten to this point, the Federal Reserve has buckled, they've folded, they've reversed course. So the question is, are they going to reverse course again, or are we just going to blow through this? Are we entering into a new period? Is something different this time that's going to cause them to not pay attention and allow things to get harder and harder and harder? I'm going to show you one chart here that will show you what's different this time. This is the CPI. The CPI here is what is different this time. Right now, we are above 8%. We've been there for a few months. And if we look at the last time inflation was this high, it was 1982. 1982 was before we got here. So if you look here, this goes back to 86. Inflation hasn't been this high. So while this entire time, every time conditions got hard enough, they pivoted, inflation was nowhere near as high as it is today. Here's the other thing about this, the kicker. Right here, when inflation topped out back in the late 70s, early 80s, when inflation was peaking here, guess what also happened at that time? They changed the way inflation was measured. That's right. They started doing things like hedonic adjustment. They started doing things like the substitution method. They started changing the way they were measuring CPI. And guess what? Miraculously, coincidentally, inflation also started to come back down during that same amount of time. And if we measured inflation the way we did back then, it would be much higher. Let's take a look. If we go to shadowstats.com, we can see this chart, which shows the blue line is what inflation would be today if it was still being measured with the 1990 measurement. And then this one is if it was still measured at the 1980 measurement, which would be, 17% basically versus what is showing today, which is about 8.5%. And so if we go back to the official inflation reading on the Federal Reserve's website, we can see that that would be way higher than what it was in 1980 if we were still measuring it the exact same way they measured it in 1980. So inflation is extremely high, and the Federal Reserve understands this. They know this, and it's persisted at this high level. And they know that at the end of the day, even though they were taken by surprise from this inflation, had no idea that printing trillions of dollars would cause prices to go up and stay up, even though that was a complete shock to them, they understand that at the end of the day, the value of the currency, the value of the dollar, is what keeps them in power, is what keeps the US government in power. Because if the dollar, let's say, loses all of its purchasing power overnight, well, guess what? Nobody can use it for global trade anymore. And so they lose all of their power over other economies around the world. Number two, if it loses all purchasing power, then no people are going to accept it for payment, which means even the military, the people that they pay to enforce their power, will not accept it for payment, meaning that the United States government loses their power overnight. So the Federal Reserve understands this. Now, I don't think that they think that we are anywhere near that or at risk of that, and that's why they're not getting as aggressive with tightening as maybe they should be. However, at the end of the day, they understand that inflation is a dangerous bug to mess with, and so they're getting closer and closer and closer to trying to stamp that out without tipping over into a deflationary death spiral. That's what's different this time. So we can take a look at charts like this that show, hey, we are at the same spot in terms of how hard the economy is getting hit by the tightening that we've been many times before. And every time we've gotten here, the Federal Reserve has pivoted. They're not going to pivot this time. And we have a lot more economic pain ahead of us because the express reason for causing that economic pain is to cause unemployment, is to cause incomes to go down, is to stop that wage price spiral so that prices come down, so that income gets lost, so you can't sustain the demand for those higher prices, destroy the demand, let prices fall. Then they will have the ability at some point in the future to pivot, because then they'll be able to say, hey, we got inflation under control now. With all of the eyeballs and attention that are on them, they're not going to be able to get away with redefining or making big changes to the measurement in CPI. If suddenly the CPI report comes out and it's like, hey, we're at 2%, and everybody's like, wait a second, that doesn't make sense. And then we look and see, oh, it's because you just changed the way you're measuring it. That's not going to fly. There are many, many eyeballs on what the Federal Reserve is doing now. So something like that won't work. They know they have to tighten. They're probably not going to tighten enough. And by the time they do, it'll probably overdo it and tip everything over into like a deflationary death spiral. But at the moment, we are not going to get a Fed pivot just because we're at the same place as we were before, because the main difference this time is the CPI. It has never been this high since this graph is showing. Hope that makes sense. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.